actually talking about futures specifically, but the same idea applies to what I'm talking about with an opening play. But opening play is what I do at the beginning, at the market open, to gauge sentiment and direction. I'm going to talk about specifically fresh trends and how to find those, and then I might go back to opening plays. But fresh trends is trying to figure out what is the trend and how do I know if it changed or not, and how do I trade that? And that's how I use Fibs specifically. Let's see, let's find something to start with here. So when I draw the Fibs, and when I talk about Fibs in general, I'm only talking about one tool. I'm talking about the Fib retracement tool specifically. Ro, let me know if you're recording, buddy. Did you start yet before I go too far into this? Okay. I'm talking about specifically the Fib retracement tool. I'm not using extensions. I'm not using any other of the many ways you can use Fibonacci's. You can use them in channels. You can use them with time series. There's lots of other ways to use them. But today's discussion specifically is about using the retracement tool and using it to look for trend changes and then set targets for when you want to either scale or completely exit your position. Fib levels tend to act as really strong support and resistance. They're areas where price tends to either reverse or heavily react. You know, either they'll bounce right off very heavily, or they'll go through and then come back and back test and then really take off in the direction, in any specific direction. What we look for when we're trying to draw the Fibonacci retracements and extensions, and again, I'm only using the retracement tool, is an uptrend or a downtrend. And in order to find one, you have to be able to define one, right? So an uptrend is when the peaks and the troughs are ascending on your chart. Where you have an uptrend, you have higher highs and higher lows. And let's go right here and I'll show you what I mean by that. Here's a very clear higher highs and higher lows. So here's a very clear uptrend where we have a really large initial higher low followed by this move here. And then we continue making higher lows as we go up this uptrend, right? And on a downtrend, it's the opposite. It's when the peaks and troughs are descending on a chart. I'm just looking for obvious ones right now. And you get lower highs and lower lows. You know, the pullbacks and the pullbacks are the upside retracements, right? And then you get these really big pushes. And then you get a retracement and a push, a retracement and a push. And you're getting this lower high, lower low, creating a downtrend. Typically, not always. One way to use a Fib and as a retracement tool is to look for that 50% retracement. It's that 50 to 61%. Is a really common ratio for a price move to make before it bounces and goes in the opposite direction. I'm just going to zoom into this area right here. I haven't even looked at this yet to test it, but it looks like it from what I'm seeing here. So if I'm looking at this move here, for example, from here to here, you can see that the 50%, which is that middle line, this is the 50%. So we moved down, we came back up, bounced off the 50%, and then came down and then continued down. It's very common for us to retrace 50% before we move down. And this is not the way I draw Fibs. This is just something I'm let me just remove these. I'm just showing you as a measurement to show that a lot of times you'll see a 50% retracement and then a move in the opposite direction. I draw from this trough to this lower peak because it looks like a lower high to me, and it looks like it's going to move down. It looks like buyer exhaustion. It looks like we made quite a big move here. RSI is at the top. I'm looking for a lower high, and I'm looking for a reason to trade down. So I see this lower high, and I see us kind of coming down. So I draw this Fib, and I'm looking for this 50% line to become a form of resistance on this down move. My targets would be 161, 261, 423, and 685. and it's unusual for us to go much further than 261. That's usually a big time move, a big price move, and that usually happens on the lower time frames, not the larger time frames. And as you can see, Apple on this particular day, 9/8, back in September 8th and September 9th, made this lower high. And the 50% acted as resistance. And not only did it hit the first target, but it went right through the second target. And that second target of 261.8 acted as resistance again, giving you pretty good reason to believe there's more downside left. And in this particular case, there was, and it went down to the 423, which acted as support. And then we had this higher low, but it never went above the 100%. It barely made it. It tried to get up there, and then right at the open, it swished right down below the 423, and then it continued all the way down the following day to the 685, where it bounced again and created support. But the beauty of this is I'd like you to look at is how strongly and how well these lines of support and resistance are being respected. You can see very, very clearly that without having any history, without knowing any other prior levels, where they were, how they could have worked, what we've done there, you can draw it on a brand new fresh trend and get this and get very, very similar and get very, very accurate levels. So I'm going to go and just edit this and extend it to the left and see if there's any left extension on. See if there's any confluence there on the left. This is now, I drew this here and I'm looking at history to see if there's any confluence. And what you can see is there actually is quite a bit. There actually is quite a bit of support and resistance. It's very common that what you'll find is that when you draw them correctly, previous areas where fibs can be drawn or previous levels are going to be in future levels. Where price was respected earlier, it's likely to be respected again in the future. So it really doesn't. The beauty of this is it doesn't matter if you have previous levels of support and demand, of support and resistance drawn and figured out, and you looked at all these other possibilities. When you go and you see a fresh trend and you draw the new trend, you draw the new fibs on it, it'll give you the levels that you can expect for this particular move, which typically overlap with previous levels. Let's do this again. Let's look a little further up. You can see that this is a downtrend, lower highs, lower lows, lower highs, lower lows. We had a chance here for a higher low, but it failed it, continued down. Now we have this higher low. Maybe this one will work. That 50% is acting as support. Shot right up to the 161, went up above it again. The 161 is acting as support. Tried to get through to 261, but failed. We have this big shooting star, gives you a good indication we're not going to continue up. And that's exactly what happened. We made this lower high. Let's draw that one. Fell through the 50% and never even tested it again. Just shot straight down to the 161. Remember, the trade here is the 50% to the 161 is the strongest trade. And then there's always a possibility to continue to 261 and 423, and then again to the 685.30. Let me draw something out to help explain how that works and why that works so well, right? Let's actually draw out a fib here. And then let's zoom in a bit, actually. Okay. So if you're taking the trade when it crosses the 50%, you're putting a stop loss at the 0. Let me fix that. It actually should be red. You're putting a stop loss at the 0. So it's crossing here at 50% at 146.50. You're putting a stop loss at 147.50. You're putting a stop loss there at $1. Your expectation is that it goes down to the 161. So it's about from 146.50 to 144.50 or so. That's $2 for $1. So you're doing a 2-to-1 risk return every single time. You're doing it at a place of high probability because there's a reason to believe there's going to be continuation because there's this lower high. There was an attempt to go back up, but the sellers jumped in and pushed it before it can get back up to those highs. There's a reason to believe there's going to be a continuation down. So that 50%, what that tells me is, think about a glass being half full or half empty. If it's a little bit more than half full, it's tipped to the full side. If it's a little less than half full, it's tipped to the empty side. It's like a scale almost. There's more buyers than sellers, and there's more sellers than buyers. And in this case, right up here, when we failed and went below this 50%, it was the indication. When we failed this high, there's more sellers than buyers, and this pushback down means this move is being, this 50% of this move is being sold back by the sellers, right? It's being pushed back down. So it's very likely that we'll be taking out this bottom, and that's what that indicates for us, and that's what we're actually taking the bet on, what we're playing when we see that lower high. We're seeing the indication of a possibility of a new fresh trend down from this uptrend, and we're seeing an attempt to continue up, but a failure at it, and then we took away more than 50% of that move, which means to me it's a good place to take a trade and target the 161, possibly even further on, and then keep your stop loss at that zero mark, which is 147.50, right? As soon as we get past the 100%, I even sometimes even before that, I move my stop up into profit, and I wait for that 161. And when I get to that 161, a lot of times what I'll do is I'll take half off or take some percentage off. It depends on the trade, depends on the time of day, it depends on what I'm trading. There's a lot of things that this depends on, but you can scale at these points. You can get out 100% at these points. But as long as your stop's in profit, or you can just get stopped out, meaning you move your stop here when it goes to the 161, you move your stop to the 100. When it gets to the 261, you move your stop to the 161. You can do that too. You can just keep moving your stop up. It's up to you how do you want to play it. But the idea of this is you're looking for a change in trend, and you're looking for a risk return that's greater than 1-to-1, which is what you get with this trade. So this is your risk in the red. This is your reward in green. And then this is your possible reward, depending on how long you stay in the trade and the actual trade itself, how well it could play out. So you have this small risk. This is your reward, and this is the possibility of your reward in this particular trade, right? And that's in any trade, you have to look at it. It's either going to be 50-50, right? It's either going to go up or it's going to go down. Now it can go sideways, but you shouldn't be in the trade if it's going sideways, or you think it's going to go sideways. You should be in the trade if you think there's going to be an upside or a downside to it. So if it's a 50-50 and you have reason to believe that it's going to continue in a certain direction, and you're using a system like this, then even if you lose a couple of times, your loss is very small. It's half of what your wins are. So you're always going to win more than you lose in every one of these trades. And the possibility is when you get a few runners, that you can get some really big moves, and you can really win big. You should know that in any trade. So this is more than just a way to gauge when to enter a trade. It's an entire trading system, because I see a lot of traders that have trouble with, where do I put my stop when I enter a trade? Where should I put my stop? Does it make sense to put it where I entered, right after I entered? When should I move it up? This kind of does all that for you. It's a complete trading system. You see a place for a possibility of a higher low, and you wait for your entry when it crosses the 50% line, because now you know there's more buyers than sellers at this point. They tried to go back down. It failed. It's bouncing up. This was the previous low. This is the new low. Now you have a reason to believe that it's going to continue in this direction, right? So now you know where to put the stop. You know where to enter. You know where to exit, or you know where to scale and continue scaling until you get totally out. That's how this system works. That's why it works so well, because it's not just using Fibs to find levels, but because you're using Fibs to find levels, set your stops, set your targets, and get an idea and get a really good understanding of the overall trend. When is this trend over? When this trend is over, when you get the lower high and it crosses below that 50% and it continues. Now, these still work. So what you're looking at is while it's still above this 50%, it's still a long trade. It's still in a long trend. So this is actually a retracement, and that targets somewhere between the 100 and the 50, but it pushed through. It went back to the 50, which means this could still possibly turn around and run, right? But it'd have to go above. It'd have to go above this 146.25, and it never does that. So instead, it continues down, and this trend takes over, and this gets nullified because we went below the zero line here. So now you have a new structure down. Does that make sense? Does anybody have any questions before I get too far along? Because I have a little bit more I want to add to that.
My big question with your system is, like, do you know it's the right time to be pulling a fib down and start entering off that 50?
Right. Okay. So you're looking for reasons for it to, you're looking for reasons for buyer exhaustion or seller exhaustion to kind of take over the trade a little bit. And there's lots of ways to get a feel for it. What you don't want to be doing is right away when you first see, I'm looking for an example of it. Right away when you first see it, oh, sorry, here's a good one. Here's a good spot. So we've been coming down, and then we had this little push up, and then we came down this far, and now we have this higher low here on this particular time frame. It's a 4-hour time frame on Apple, and we actually opened up above the 50%. So do I take the trade? Do I not take the trade? Should I wait? This is actually a tough spot to be in right here, because this is what you're seeing. You're seeing that we went up, we pulled back 50%, and now we opened up above it. There's a really good possibility this is going to take off and run up to 130. But it doesn't. It fails. It goes right through and goes below the zero line. It wasn't an uptrend. It ended up that it's on a smaller time frame. This moved up. This was the move up, and then on the larger time frame, this is the move down. Now, how do you know for sure? It's very difficult to tell. You have to use other indicators. You have to get you have to have an understanding of the fundamentals a little bit, right? You have to understand what you're trading. And if you're doing it strictly technically, though, if you're going just by what's on the chart, because a lot of us believe all the information is on the chart, and I believe that too. However, it's not always very clear what's happening on the chart. This is actually a higher low. It just, there were still sellers here that wanted to push it down. There's still sellers here that needed it to go lower for whatever reason they wanted it to go lower. It happens a second time with Apple. We go above the 50% line. We have this higher low, and we go above this 50% line, and we tag to 100 and go back to the 50, and tag to 100 and go back to the 50. Now, our stop's down here. We could move it up to here at this point, and we could have been stopped out and in profit, and that's fine. And then it runs up again. We could have entered again and move our stop up possibly in profit, maybe not, maybe we kept it in the same spot, but it goes below it again. So how do you know it's the right time, right? And that's really tough. And what I'm showing you here is I have this drawn as the new higher low, and I'm watching it, and I'm wrong here and I'm wrong here. And I don't have any other evidence that it's going to go up or down. I don't know which way it's going to go. But we test the 100 1, 2, 3, 4 times before we finally break through. And we break through, we have momentum. You could fail at this trade a couple of times before it finally does work. However, if it goes below the zero line, it's broken. It's no longer, the structure's broken. It's no longer a higher low. It's no longer a new trend. So do you want to take the first one? Do you get it? Do you want to get in right away? Do you want to get in as soon as it closes on the 50% line? I'm not going to be too specific about that, because you need to have some experience. What I'd like you guys to be doing, especially the ones that are new at this idea, is to watch it. Is to get a feel for what's happening, because this is the actual trend, and it is followed all the way up. It does work really well. It hits resistance here, it breaks through, it tries to go below it, it's not working perfectly. It does it again here, and it actually ends up hitting target up here, and it ends up being support. And as you can see, it stays as support even as far as this area here. So this was actually the new fresh trend up. but there was a lot of indecision here. It's right after earnings. You have to kind of know what's going on with the stock a little bit. What might make that happen? What's going on in the overall market? Apple's affected by NQ, right? Is affected by the Nasdaq, the QQQ. What's happening there? Is there some kind of selling pressure going on there? So you have to kind of know a little. Is it a small cap? Is it an IWM? Is it a penny stock? Does it have news? Is it being pumped by somebody or shorted by somebody? Some of that might play into why the price action looks a little messy and not as clean as it should. Because if any system, which doesn't exist, was 100% accurate, then everybody would be trading it and it wouldn't work the way you'd want it to work anymore. There is no one trading system that's 100% accurate, but there are ways of measuring. I use this as a ruler to measure the market. I use this as a ruler to measure the trend and give me an idea of what can I expect from it. So if I miss it or I mess it up, I take that as I misread it. And I'll move on and I'll try to find another reason to get into that stock. What I look for specifically, though, to try to give you an idea, I look I look for a reason for it to switch directions. I look for a reason for the trend change. I'm looking at this trend here right now, and I'm seeing it's at 161, 261, 423, 6. We get all the way up to right up to the 685. Look at that, right to the top. They called the top, and then I get this lower high. Now, if I bounce off the top and I get a lower high, I am going to take that as a possibility. And I'm looking at you can look at the RSI too, right? We're way overbought. We're staying up here, and then we're getting this lower high on the RSI. We're going below the 50, which is typically bearish on the RSI, and I'm getting this lower high here. I may have messed up a previous trade, but this trade I think I would get and I would nail because I hit it. I'm not going above it, my level. Something like that here. I'd be looking for a lower high here, but it failed because we went above it. A lower high, and then we shot down to 161, 261, 423 right away, and that worked really, really well. So I'm also looking for confluence with other ways of reading the market, right? I'm looking for candlestick patterns. I'm looking at trend line breaks. I'm looking at moving average crossovers. I'm looking at where's the VWAP. Some of you might know about pivot points. Are we bouncing off or through pivot points? Are we using the RSI divergence maybe? You have MACDs, you have stochastics. You have so many different ways of taking a look at the market that when you use those, you turn them on and you start paying attention to those. They'll give you an indication that there's a possible reversal. And then when you see that possible reversal, you look for those higher lows and lower highs. In this case, you might be able to draw a nice trend line. Didn't look that great. It ended up that the entry was actually here because this trend line ended up showing up later. But there's no reason why you shouldn't have drawn this one first, and then this one next, and then this one later. So it kind of messed with traders a little bit here before it actually decided to make the move that it was supposed to make back here. Something happened in between here that caused this to get pushed down. News related, stock, I don't know. Who knows? I'm not sure. I wasn't following this Apple that specifically at this particular time back in May. But that's what something was happening. So you watch the price action. You watch it for a reason to change. You have a trend change here now from the trend line, and you're starting to see a bounce up here. You're still at that 100%, but is it going to bounce off again? And you're starting to see a new trend take over here. And you can see the higher highs and higher lows. And this original, you can go back and draw this. Even if you're here, go back and draw this, and you get a good idea of what's next level is and what the next level is. So you can end up trading maybe from here to here if you feel confident enough, but at least you know where the levels are, you know where the trend is, and you know what you can expect until you get that lower high, or you get a trend line break and a lower high, or I keep clicking the wrong one, or a trend line break and I'm sorry, a moving average crossover and the lower high. So let me turn on the moving averages. Maybe that'll help give us some indication here. Here's one with moving averages on it on the 1 hour. Is that what I was looking at? The 1 hour? No, I was looking at the 4 hour. All right, here's the 4 hour. So look at this section right here. We have this lower high. First, we have this lower high in the overnight hours, but then you have this lower high between the regular trading hours. So you have this lower high in the regular trading hours, and we cross below the 20. Let me actually turn on the 9 too. So here's the 9. We have this lower high. We cross below the 9. The 9 crosses below the 20, hits the 100%, and bounces off the 50 here. And we have the MA is looking like this. This is confluence. This is a reason to take a trade down to 161. You could also start drawing a trend line, that's kind of being respected. So you have, it's testing a trend line. It's below the MAs, and we have a lower high, and we have a fib break pass. We have a 50% that's acting as res, and a fib break below the 100%. This is extremely likely to hit. This is also likely to get hit when you have this kind of movement. If we blast through the 161, either we go back and test it and go to the 261, or we go straight to the 261, which is what happened here. And you'll get to watch it. As you watch it and you see these types of trades happening, you'll start to be familiar with how the price will react to those different levels and what happens when it blasts through it, or when it goes back and retests it, or if it goes back and retests it and then comes back even further. How far back does it go, depending on what the buyers and sellers are fighting over at that particular time to try to gain, the power. Let's look at something else other than Apple right now. Let's go to, maybe let's go to Tesla. Tesla likes the 1 hour a lot. So could you have seen this move down? To me, I'm starting to see a little bit of a head and shoulders. Could you have guessed that this was going to come down to these levels? Could you have bought puts down at the $1,000 mark and made money? And how would you know if $1,000 was going to be the number? Well, let's take a look. We have this fantastic uptrend. The MAs are all in a beautiful pattern up, so you know this is an uptrend. You can see the higher highs and higher lows as it moves up. Gets overextended here and pulls back. It makes this lower high. So you might say to yourself, well, then that's clearly got to go down to the 1,078 level. But it starts playing with this 50%. In the overnight, there's a little bit of push down, but you know what happens in the overnight. Things can move differently than it does during regular trading hours. It was respecting and bouncing off the 50% all day. And then the next day, it actually got back above that 50%, tested it again, and bounced off. So this never really gave you a good entry. Although if you could have, it's possible that you would have tested these. But if you're trading the 1 hour, you want a 1 hour candle close below the 50%, and then the next candle with continuation before you start entering the trade. So as a trade entry, which you want, whatever time frame you're using to measure with the fibs, that whatever time frame you're using to actually take the trade, you want a candle close in the direction. If this was a short, I'd want a candle close below the 50% line, and the next candle to be moving before I actually initiate a trade, moving away from it. In this case, you never got that. All the candles closed either right above, right at it, and then bounced above. So there was no entry here below the 50%. If you initiated it after hours, possibly you would have taken it. But the next day we bounced right up above it, and it became support again. So there was never actually, during regular trading hours, a reason to think that this was going to move down. There was no close below the 50%. So we keep looking, and up here we have this lower high. We came down here, and it's this must be a lower high in a much smaller time frame. But in this particular time frame, we opened up down here and we bounced up to this level. So this is actually a lower high. And what did we get? We got a gap down to just below the 261.8. And then when it bounced, it went right to the 161.8. So there was news about this, obviously. Any of you who follow Tesla know what was going on. And then, he sold his share shortly after. But look how well it respected the 161. And then we made another lower high here. It respected the original. This mimics these levels close enough that I probably wouldn't even be using them. But you can see what happened is we made this lower high, we gapped down, we tried to get back above the 161. This trade is not negated until it gets back over the 50%. Never did we get back up that high. We never even got back up to the 100%. So this is still in a downtrend. Lower high, fell way down, all the way down to, when we fell here, we bounced again. And a lot of people will call on the bottom here. We're done. We're bouncing here. That's not what happened. It came all the way down to the 685.30 during regular trading hours. And then the overnight, they pushed it down to the one, they wanted an even number. They got that $1,000 and even below it before we bounced. And then we bounced and we made a higher low. And look exactly where, let me zoom in a bit. Look exactly where it stopped, right to the 161. So you could have entered this trade long at the end of the day, that last hour of the day, and the next, unfortunately, would have been at 4 a.m., but the target was hit at 4 a.m. at the 161, exactly as the Fed would have played out. However, this doesn't negate the fact that we're still in a downtrend, because overall, we really didn't break trend, right? Let's draw a trend line here quick. Can we draw a trend line from here? Let's see. I mean, we can do this, and we can see that we're still in this downtrend. This was just a retracement. This is a move back up to try to keep. Basically, it's a reversion to the mean, but because we went down so far, it retraced some of that move. As a matter of fact, let's see how much of that move it retraced, because I never actually did this. Oh, this was the gap down. So yeah, maybe it is from up here. Maybe it is a full 50%. No. Yeah, it did. So from this spot to this spot, the 50% line is here. We retraced half of that move back. That's so, like we were talking about before. Let's go out. Let's move out. Let's move out a little. Let's zoom out a little bit. Let's go to the 4 hour. No, let's go out to the daily. So on the daily, what do we see here? We see a big move down and a retracement back 50%. Oh, did I take it from here? Oh, it was in the overnight hours. Shoot. I guess I won't be able to show it to you the way I wanted to. Yeah, it's because we did that. We hit this peak we hit the 50% at the overnight hour, so I won't be able to show it to you on a daily chart unless I showed that. So essentially, looking at it from this point of view, the way I've been explaining Fibs, we're actually still in a major downtrend. This looks like it's going to be coming down to where? Let's get a target down to 905. To this, possibly down to this 88 level from which is a previous level I just left on from before, right? On the daily, it's looking like we're going down to 905 area. We are below that 50%. Excuse me. We are below that 50%. And once we break that 100, this is next, according to the way we're trading and what we're seeing. Any questions so far before I keep going to the next thing? No? Okay. So
Actually, yeah.
Good. Shoot. I want to hear some questions.
I was wondering, do you normally use your the moving averages with these Fibs?
I use everything with my Fibs. So I don't trade just one thing. I can't trade just one thing. I'm never right. I have to look at this candle at the top. I have to look at this candle and this candle. I have to look at what kind of patterns am I seeing in terms of TA. You know, if I'm doing any kind of trading, am I seeing any wedges? Am I seeing any channels? Let's see. Here's a good channel right here. If not, maybe a wedge. Am I seeing any channels? This is a break above the out of the channel to the upside rather than a downside on an up channel. Am I seeing where are we compared to the VWAP? Am I seeing any divergences in any indicators? Am I seeing trend line breaks? The moving averages themselves. What kind of pattern are the moving averages in? I use them all, and I try to put as many of them together as I can before taking the trade. You know, I actually look at a bunch of other things too that I won't talk about today because they're more advanced ideas like volume profiles and resting orders and other information like that. But specifically when I go to look at a trade, I don't just look at the fib and what the fib targets are. Oh, and I got a higher low, I'm just going to take it. I look to see where the moving averages are. I look to see if it's a day trade, where the VWAP is during the day. I look to see if we have any trend lines or any candlestick patterns or any divergences that may exist, and if they're all, any of those are there, and if I have 2 or 3 or 4 of those that all tell me the same story, then I have a reason to initiate the trade, and that's when I get in.
Can you confirm the moving averages that you use? I went through like all your Discord posts that I could find, and I think I got it figured out, but I just wanted you to confirm since you're doing this.
Of course, I use the 9 EMA, the 20 SMA, the 50 SMA, the 100 SMA, and the 200 SMA.
All right, thanks. That's what I thought you were using.
Yep, and that's what these are right here. The 9 is this darker line. I have mine coded. I usually have my 50 thicker because the 50 acts as a strong support and resistance when it goes above or below it. As a matter of fact, I'm just going to point this out quickly and then I'm going to move on. But if you look at the RSI, a lot of people say when it's above the middle, the 50% line, it's bullish. When it's below it, it's bearish. But if you compare it to the 50, which is this thick line right here, we're above it here and then we're below it. It turns red. That's when we're below it. And it goes back above the 50. It goes back above the RSI 52. So you'll notice that. And then when we have this big extension, the RSI gets a little bit overbought and it comes back down to the 50. That's still bullish. You'll notice that it stays above the 50 all through here, where it goes back below it and it goes back below here at the same time. That 50 SMA is extremely similar to the 50 on the RSI. So it actually acts as a really strong support and resistance point. The 20 is not as much. It's more of a good indicator for trend. What side of it am I on? So and what side is a 20 on based on the 50? That gives me a good indication of trend. The 9 EMA is another very good indicator for a very, very short term of trend. So you know when to enter the order or get out of an order maybe. But I love this kind of pattern. I love it when I see the 9 above the 20, above the 50, above the 100, above the 200. When I see that, and I have good reason to believe there's more continuation to it, I'm going to stay in that direction. Any other questions? All right, let me see what else I can add to this. So basically what I look for is a fresh trend and a trade in that direction. A fresh trend is initiated sometimes from a chart pattern, like a wedge or a head and shoulders. Does anybody have any tickers for? I haven't done small caps in a while. I don't have any recent tickers. Anybody have any recent tickers that were runners that were really decent that they can share?
BTB was on Friday.
BTB? Oh yeah, BTB was definitely on Friday. Let me clear this chart out. So here's a really good way to use the fibs. And I use the 5-minute typically. You can go down to a 1-minute. Sometimes it's more accurate depending on what it is and how aggressive it's being, how much momentum it has at that particular moment. But the day starts and we shoot straight up and then we come down. High or low. What's the 50% of the move? It would be 224. So we have this high or low and we're still way above that 50% line. So I draw my fib. I initiate my trade. I'm looking for a higher low. I'm looking for a reason to buy right now. I'm looking for a higher low, and I'm looks like something I might be getting here is a higher low, and I'm above the 9 still. It's still an extremely aggressive uptrend. All the MAs are the way I want them to be, so I draw it. Maybe I initiate a trade around here on 250. My target to get it, my first target to get out is 270. It pulls back. Now I have these levels drawn. I know that if it goes below this, I'm definitely out. But if this acts as support, I may stay back in. I may stay in. And if you see this pattern happening, which hopefully you all do, as you're trading, if you see that price is being respecting a trend line here like this, oh my God. At the break of this trend line, and you're at the above of the 100%, you can expect this to move not only to 161, but probably higher than this last high. And you know where it's going to go because you got these fibs drawn. the 261. So if you're following the MAs and if you're following the patterns of these higher lows and higher highs, and you have these levels drawn, you know when to enter and exit. You have a really good indication of it. Now you have this lower high. You may see people inside the trader chat, inside the main classroom, say something like, "Oh, it looks like it's curling back up." Maybe it is. You knowing that if you see a lower high and it goes back below that 50%, you won't take that trade because you know it's going to move down to its target, because that 50%, which is 161. Although it didn't hit it right here, it went back, went up against this 161, bounced off it again, never crossed the 50, and then eventually hit it later at 2 o'clock. So during this lunch hour lull, because of this lower high, it moved down and hit and went. It just missed the target by 1 tick because they front runned it, but that happens once in a while. And then we get a higher low. So if you think you want an overnighter, look for a higher low towards the end of the day and then watch the price action, because that's when you get them. That's when you really get them, right? As you can see by these levels. So the original 5-minute higher low that I drew was respected all the way through into the night, into the evening, into the after hours. I hope that helps you guys. Let me remove this trend line here. And you can draw trend lines throughout, because you know it's still respecting this original move. And although we had a lower high, we had a new higher low here. So it's going back to the upside, and this is still in play until we're above the 681. Once you're above the 681, you reset it. It's going to come back usually and retest it, and you do a new fib there, and you reset it, and you keep going from there. That's always worked for me. This you can't find. It doesn't usually come standard. You have to add these different levels, a 685.30 and a 423.60.
Is there a time frame you prefer to use the fibs with?
5-minute typically, again, but it depends on what I'm trading, right? I'm not going to use it on. I don't day trade Apple. If I did, I would know what time frame to use. But on this particular day, it would have worked. Here's the first high low. Here's the opening play. It came down and made. Actually, you would have thought, oh, mamma mia. Let me remove this. Okay. The way I would have played this is I saw this really strong initial drop. I use pivots, but I won't talk about that today. Really strong initial drop, and then a lower high. And it looks like to me like the MAs are about to reverse. And I would have thought that this is going to go and reverse down. But that 50% we never closed below it. And we started moving up above this. So I would have also drawn, without even erasing the first one, I would have drawn this also and gotten a feel for, is it possible that this can go in the opposite direction? And I usually take a look at this level right here, this little area right here. Why? Because it's the 50% of the down move and the 50% of the up move, right? It's a little bit of a range box here. So if I'm below this, then this lower high is going to take effect. If I'm above this higher low is going to take effect. And in this case, it shot up. So I'm going to remove this, and then I could see we hit the first target, came back, bounced off that target, went to the second target, went to the third target. I'd be almost completely scaled out by here. But as soon as I got this lower high, I definitely would have been scaled out. This lower high, cross of the 9 EMA, cross of the 20. But in this area here, I definitely would have been out if I was day trading Apple. I need some questions so I can answer them, because I'm coming to the end of my material. You guys all got this? I'm stunned. I hope you all got this.
I asked a lot of important little details that I had for you. I've been waiting a long time for this.
Yeah, no problem. I know that Foxy wanted to talk about swings and whatnot, and I think what I'm going to just quickly do for her is just explain how I would normally take a look for a swing. So let me pull up Duo. Let me go to the daily. I look at the daily chart. Well, you know what? Let me add that quick. Before I move on to this, let me go back to Apple. So the fibs that you draw, let me clear all these. Let me use the other chart. the fibs that you draw on these charts have different weights of strength. Raph, I'll definitely go over the EOP again. 1 second, buddy. Anybody, you guys can type your questions into chat too. I'll go over that in 1 sec. The weights that you draw on different time frames have different weights. So if you draw it on the weekly, daily, monthly time frames, those are going to have much stronger weight, much more likely to have price react to those levels than if you're going to draw them on the 5 minute, 1 hour, 15 minute, 4 hour. So the higher the time frame, the more likely it's price is going to react to it. The stronger it's going to react to it. So if you have a higher low on the daily, and then you have a contradictory higher low on the 5 minute or 15 minute, and you have a level. Let me try to explain a little bit better. The levels on the daily. So here's a good area right here. Let's look at last year. Here's some indicators that in 2020 that we were going to take a big spill. Here's Apple on this uptrend: higher lows, higher highs, higher lows, higher highs, lower low, lower high, higher low, higher high, and then this right here. So there was this level right there at about 81, 87. Man, we all should have bought Apple back then, huh? At 81, 87. And then we dipped down here. We came back up. So there's an indicator. There's some price volatility. There's a lower high, and I bet you see it on the weekly. You do. You have this lower high. These levels here are really strong, really, really strong. So if I was to take a trade, where's 2020? Where'd you go, buddy? If I was to take a trade intraday in one of these days, and it looked like it was going to, who's watching TV over here?
Mike, dude.
All right, and if I was taking a day intraday on this day or on this day, and let's say it conflicted with this level, and I didn't have these levels drawn, and price reacted, I wouldn't understand what was going on there. Why is it going up? Why is it going down? Why is it bouncing off an area that I don't have drawn? I did the fibs the way Emu told me to do it. Well, you need to have these higher time frame levels drawn first before you go into the deeper into the more micro time frames, just like you would do in a channel. If you draw a channel in the daily and then you draw it on the hourly, let's do something like that so you can get an idea. Let's draw this channel here. I really wish this thing would work when I wanted it to work. Hello. Draw this channel here. Now, inside this up channel, you're going to have a down channel on a smaller time frame, another up channel on a smaller time frame, and down, up, down, up. So if I go to the 4 hour, you can start to see it, right? If I go to the 1 hour, actually, let me zoom out of the 1 hour a bit. You have this, see how you have that lower high. If I don't have certain daily levels drawn, I wouldn't know what was happening when it didn't work right with my intraday levels. And a lot of times they need to match. A lot of times the small time frame levels end up targeting these higher time frame levels. I don't have them. I didn't do this previously before getting together with you guys and setting this up, but I probably should have. But let me go to the daily quick. Let's draw out this higher low on the daily. So the higher low on the daily is this one here. You can see how these levels are being respected. I'm going to go back down to the 1 hour, and I have these levels drawn. Now, we move down here, and then we have this. This is not a higher low, actually. This is a low. This is lower than this point. So the first higher low looks like right here. So typically what we do is we move from daily level to daily level, and you can see how we did that. Although I have this, if I was just trading the hourly, I may have exited here and may have exited here, but because I had the daily levels drawn, I would probably be waiting to at least the 261 and see how we reacted at this level. And what we did is it actually became support. We didn't go back below it again. And then we shot up even further till we got to the top of the channel, of that daily channel. So it's important to have these daily levels drawn on the correct trend that is currently prevailing on that, whatever it is that you're trading, on that instrument that you're trading, because it has a much stronger weight. As you can see, the daily levels where the strength was here, not in this hourly. This is the move that happened. It went from the 50 up to the daily 161. Although the hourly gave you the indication of direction, gave you indication of trend, which way we're going to be going, it didn't give you an accurate depiction of target. Although, don't get me wrong, we hit this target, and we even hit this target, and we went beyond it. They all got hit, and we ended up staying in this range for a few days. But if you didn't have this drawn, you wouldn't have known that this was even going to be support, or that this was even a level to look for. Why is it up here? You'd be looking at between here in this area and this area, the 261 and the 423, right? All right, let me go through some of these questions here. Do you scale in with fib levels? I personally don't. I'm all in and scale out. I trade completely backwards than most people. If I see a trade that I like, I'm all in, and either I take a hit or I scale starting at the 161, and I try to keep some on as high as I can until I see a lower high. Mine going over the EOP. The EOP is we call in the futures room, we call it the Emu Opening play. And that is what I was just talking about a little while ago with the 5-minute on BTB and a 5-minute here on Apple. The opening play is when we look for the initial move, the initial momentum, and in this case it was down. And then we look for either a lower high or a move up past the entry and then a higher low. In this case, it gave us the higher low, but it gave it to us at a point where we would think it's going to continue, there'd be continuation down, and there wasn't. But that's the Emu Opening play. The Emu Opening play is try to gauge direction early on, and this is when I drew this box of where is it going to go? Is it going to go up or is it going to go down? And this box would tell me because I have a lower high, so move below this box would be down, or a higher low, and move above this box would be a long. I can do it with something else. Anybody have any other small cap I can kind of throw on there real quick before I move on to the other questions? Just so I can show an opening play. I could do it with futures. Let's do RTY quick.
Which OXBR went after hours on Friday.
OXBR after hours. All right, that's going to have to be a 1 minute because that is quite volatile. So this thing shot up and came back down. Let me get my fibs back on. Where's my fib retracement? And came back down. Didn't make it to the 161, but the 50 held. The 50 held until we finally did get there. That's how I would have drawn the fibs. That's the opening play. You get this. This is what we look for in futures: a big move in one direction, a pushback, a low volume pushback, and then a continuation into the target at some point. And that looks like how OXBR would have. I wouldn't have been able to enter this trade unless I was trading something like maybe a tick chart, which I almost never do. But I can show you what that looks like just for shits and giggles. I can give you an idea. Even then, you couldn't really take this chart. This is the only way you could have taken this trade, and unless you chased through Momo, this is the only way you could have taken this trade. However, there is one more thing we should look at, right? We should look at the higher levels. We should look at the daily. Was there a reason to think that it was going to run on the daily? I don't have a good one. 4 hour, 1 hour. I mean, it looks like it ran a few days before, so it looks like it's just based on earnings. That's a tough one. That's a tough one because it happened on earnings and it happened so quickly. If you weren't playing earnings, the only way you could really take this trade is this right here: an entry around, 450 with an exit around $5. Although it did run over $1, this part of it I would have missed. There's no way I would have gotten that unless I was looking for it specifically based on fundamentals.
Do you only enter on the 50 strictly, or will you enter on the 3820 or the 60?
No, 50 strictly. That's where that's where I think the strength is. It's half of the move. So although you can argue more there's other people that argue that the 61% or whatever the golden ratio is that's the best place to enter. I don't agree with that. I agree with the 50% line. That's where there's more buyers than sellers. That's where 50% of that move is very, very common. Where also think about it this way: if somebody is wrong in a direction and it retraces back 50%, that's where you can have it move in the right direction, and then let me give you an example here. Hold on. Let's say you were. Let me find a 50% move again. Let me go to Apple. It's not what I wanted. Let's say you went long up here. Probably not the best spot. This move is from here to here, right? Okay. From here, actually, that's not even accurate either. Okay. Let's say this move happened here, and it was ripping. It was ripping, and you went long here, and it went against you. And if you can count on that 50%, which you can most of the time, especially if you look for it, a lot of times you'll see that 50%. You can add here, and you only have to get out halfway up. And halfway up is another 50%. That happens a lot in the market, and it gives I don't know if it gives hedge funds a way to get out, so it moves a certain way, or for whatever it is, however it works or why it works. That 50% line works extremely well because it gives most traders an out if they do it correctly, because you can double up in certain areas. And I don't want to I'm trying to avoid getting into a completely complicated side discussion, but you'll see it a lot. So because I've seen it a lot, and in my experience, it seems to work really well. I use the 50%. And I was using the glass half full, half empty as the example, or the scale, where you have an equal weight on each side, and then you shift a little bit to one side or the other side, creating a 49-51% move in weight difference in scale. You'll see that it'll shift in that direction. And so I think of price action shifting in that direction when I see that happen. All right. Register cash, we're recording it. You get to see it again. CSCW for Foxy seems to be a popular swing for Meta and Night. Oh, yeah, I know. I'm in it too. Could you possibly do a Fib scenario? Okay. So on the daily, I don't have that one drawn. I wonder why. On the daily, I have this lower high. And then I have this lower high drawn. I think it's because it's a weekly. Yeah, this is a weekly, and I seem to respect the weekly a little bit better. So right now we were in this down move, and we went down and hit this target. So as a fib, we go to the daily. What I'm looking for right now, Foxy. So we had this. I'm looking for a move. I'm looking for a breakout of this trend line for an entry, actually, and I'm in it small right now. What you look at at the daily is you see this initial higher low earlier on, and the targets are below these targets here, which was the daily downtrend, or this weekly downtrend, I should say. So it's having a tough time getting above this weekly fib number right here of 80 cents. Again, whatever the reasons were that took it down, earnings were good. Price so far, the company looks like it's in decent shape, but it's having a tough time getting above this 80 cents. So what I'm looking for now is a weekly higher low, which is this right here. Hopefully we don't break below that 52. If we do, I'm no longer going to be looking at it for a while. But if we bounce and break that daily trend line and stay above this 52, I'm going to look for this higher low, which takes me up to this $1. And I know that's really small for you guys, probably in a corner, but it takes me up to it has confluence with this $1 area, which is what it needs to, it's where it needs to be, right? To stay listed. So I'm liking this. I'm liking that we're reaching a point here. Now watch this 161 as I pull this fib. Watch this 161 up here as I'm pulling it. I'm looking and look where it needs to be for it to get to the $1. About where we are now, maybe a little lower, right? Below that 52, I won't be too happy, but that's starting to look really interesting based on where we are and where that $1 mark is. On the daily, we do have this lower also, and we're right at the second target, another great place to bounce. So I'm looking for this trend line break, this weekly higher low, and hopefully we can get back up to that $1. Hope that answers your question.
It does. Thank you.
We were,
So on a swing, you typically have weekly levels as well as dailies.
yeah, sure.
Okay, cool.
Absolutely, yeah. Sometimes monthly, depends on what it is and how it moves.
All right.
Uh,
Thanks, Amy.
you're welcome. For equities, do you include levels on equities that happen outside of regular trading hours for higher time frames? Yes. So Wheels, that depends on the stock specifically. The very liquid ones, I do. The Apples and Netflix, the Teslas, I would. The normally I wouldn't though. Normally those outside regular trading hours, don't have an impact um, on levels and price action. It typically doesn't because they don't move that way, unless it's a small cap or something that's being pushed around. But normally they don't. If I'm trading an average stock, I'm not looking at what's happening outside of regular trading hours. And you have to really, what I would suggest is I would just test previous levels to see how price reacts at them and see what happens with after hours and pre-market. Does it work? Does it react to it? Does it not? The only times I find that they do is during times of very high relative volume. Then it does matter. Then I try to include and try to figure it out. EOP is goated. Use the strategy. I totally agree with you, Rogue. Okay. Does anybody have any other questions they want to